Hi, everybody. It's Jessica Stone at Stansberry Research, along with Bryan Tycangco, who we reached in Manila, Philippines. He, of course, writes the True Wealth Opportunities letter that focuses on a lot of different emerging market opportunities for you. And one of the things we wanted to talk about is kind of talking about the lexicon of the conversation around what an economic recovery looks like. We're hearing about U-shaped recoveries and V-shaped recoveries, and they're very different. Bryan, could you start by talking about what is a U-shaped recovery and what's a good example of one that we've seen in the past?
A U-shaped recovery would be, when the economy takes a fall and contracts, and it takes more than several quarters to rebound, but eventually does rebound. Sometimes 4 or 5 quarters, and you start to see a growth from a low base. That happened back in 2008 during the Great Recession. So we had actually 4 quarters of negative 3% growth before we started rebounding from a low base. Now, a V-shaped recovery is one wherein you have a steep downward, steep decline in the economy, a steep contraction, and an immediate bounce after just 2 quarters, probably even at the most 3 quarters. And that, an example of this would be the U.S. economy back in 1954, shortly after the Korean War, wherein you had this sudden spike of inflation, and the Fed suddenly tightened monetary policy to head off that inflation, but in the process also kind of killed the economy and killed demand.
Bryan, you see
Yes.
China having a more U-shaped recovery and the United States having a more V-shaped recovery. What does that mean, or could that mean, for investment opportunities between the two countries?
We all know that China was the first one to get hit by coronavirus, and it basically shut down its entire economy in early January up to kind of late February. It's now starting to open up again. The news is that their rate of infections have actually gone down to just a trickle, and people are going back to work. Factories are actually back up to almost 100% capacity. The big problem there is that's the supply side. China supplies the entire world. But the thing is, the entire world is shutting down. Now, you don't have that demand now to feed those factories. So even though China's factories are all online, it has to wait for all these other economies, especially the US and the Europe. They have to wait for them to come back online before their economy starts to recover. So that's why I think you're going to see more of a U-shaped recovery in China. When it comes to the US, I'm looking more of a V-shaped recovery, and I think that President Trump has reasoning behind his optimism for a V-shaped recovery later on.
Bryan, what makes the United States different from China in that respect? Is it because we're largely a service-led economy and an importer as opposed to an exporter?
Yes, I mean, your economy is basically very self-reliant, more self-reliant than other economies. The consumer drives the U.S. economy, and the Fed is buying assets to the tune of $100 billion a single day. I mean, that's never happened before. I mean, the most that they've done before was $600 billion in a month, I think. So this is unprecedented, and the amount of liquidity that they're pumping into the system is unprecedented. And I like to use the analogy that you have this big soda bottle, right? And that's the U.S. economy, that's the consumer, the Fed's shaking it wildly, and soon when they open that bottle cap, you're going to have this big explosion of demand, pent up demand, as President Trump would say. And I think that's going to be the case that drives the U.S. into a V-shaped recovery rather than a U-shaped recovery. But when that will happen, we're not so sure yet. We're just a couple of months into this. So a recession takes place for 2 quarters. So you're looking at maybe in late June or early July.
Well, it's so interesting because it's going to have so many implications for the rest of the globe's recovery, and it's going to have a lot of political implications for the presidential election in the United States. So we'll leave those questions for the future. But Bryan Tycangco, thank you so much for joining us with that explanation. I'm sure we're going to hear a lot more about the types of recoveries and why the United States really wants and needs a V-shaped recovery down the road. If you want to watch any more content, or you want to get more content like what we've just done with Bryan here in Manila, you're welcome to become a subscriber of our YouTube page. And also, please follow us on Facebook, Twitter, and Instagram. Thanks so much for joining us, Bryan. Take care.
Thanks, Jessica. Bye.